Hi, and welcome to this week's look at the main stories that have impacted the markets so far. Well, I hope you've had a good week, and we're going to start this time on a slightly wider picture, and that's the DAVOS Dampener. Now, the annual World Economic Forum, or WEF, is being held this week in Davos, Switzerland. Normal place that it is held, to be fair. Now, a lot of people say this is just a meeting of the elite. And in fact, some call it anti-business or anti-free market. Others, of course, say it's an important platform for economic, geopolitical discussions of the major impacts coming up in the next few years. Of course, it's heavily reported by global media. And in fact, there are often high-profile celebrities who get to voice their opinions on the matter du jour at these conferences. And one of those, in fact, is Abigail Disney, the Disney heiress, who in fact this week has said, "Tax us, the ultra-rich, now. Let us help take some of the pressure off of lower income individuals." Now, this does create in some people's mind a perception of socialist undertones at this World Economic Forum. But I think it's probably important that these issues are being discussed. So what else is on the agenda and what else has been said? Well, slow growth of Western markets and geopolitical discourse is going to continue and be discussed throughout the week. China's economy was up 3% for the last year. We're going to come on to that in more detail in a moment, but that's the slowest for many years, and of course that has been a topic of discussion. One of the other couple of comments that have come out, the Citigroup chief exec says that it's a positive step that China is opening up after the lockdowns and some of the forced lockdowns that we've seen over the past few years. And in fact, Deputy MD of the IMF has said they expect improvements now in the second half of 2023 and improvements going into 2024. So a little bit of softening of the language has been used about how the markets are expected to perform this year. But will the WEF, or the World Economic Forum, dampen the markets at the moment? We're going to have to wait and see. Certainly there's an awful lot of eyes and ears pointed towards Davos this week to see what's coming out. Okay, so in the last video, we mentioned, just sort of hinted at what's going on in China. And the second video, we're going to take a look at the outlook for the Chinese stock market. Now, economists across the globe are improving their forecasts. It grew 3%, of the economy in China grew 3% in 2022. Now, that was the worst for almost 50 years in terms of figures, and in fact was lower than the planned 5%. But a little bit of positivity creeping in because, of course, we've had the COVID situation. And Barclays research has said that China has now lifted most restrictions, including monitoring and testing, and that official statistics no longer reflect disease outbreaks. And they're pretty sure that this new policy is unlikely to change, even if mortality rates increase. So this is China opening back up. And as mentioned before, Citigroup saying this is a positive. China reopening is a positive. And in fact, according to media reports, Janet Yellen and the Chinese Vice Premier Liu He were scheduled to meet yesterday on the 18th. Now, perhaps that will ease and reduce the pressure, particularly on Chinese equities, if we can see some increase in the pleasantries and the niceties of US-China trade relations. Many indicators, and a lot of technical analysts will turn around and say that these indicators are pointing towards an overbought market, though. So what's going to happen? Well, obviously, there's a lot can affect these markets. We're going to have to watch these closely, but certainly China, with its reopening, could be a driver for the coming months. Okay, time to drill down a little bit, and is the possibility of a dollar index reversal growing? Now, the charts you're going to see here, the chart on the left shows a dollar index futures fell to the level, that's number one, of a 50% pullback from the growth of 2021 that ended in 2022. Now, technical analysts say that this means the price of the contract has reached the expected support level. Now, the chart on the right shows a pin bar number 2 with a long lower shadow, which technical analysts interpret as a bullish signal, thus confirming their thoughts that the 50% level is taking effect. So what they're talking about is support now higher than the lows we saw back before the growth in 2021. And why is that? Well, obviously quite a few factors abound at the moment, but weak data from the US economy is not to be discounted, shall we say. Retail sales are down 1.1%, which also pulls some stocks lower, obviously. And that old adage of cash is king is there potential we're seeing that coming back? Obviously, there's been a lot of talk about interest rates, inflation, and possible recession. It's interesting to note that the Fed statements that came out this week, there was a lot of them. There's a lot of talk there. And if I dare paraphrase to such a degree, the inflation, according to Fed officials, is still a bigger issue than the markets have priced in. We're still looking at 50 basis point hikes with regularity in the first few months. So we could see that reversal on the dollar index. But of course, a lot depends on multiple factors. It's time to listen, open your eyes, and take in as much information as possible. Okay, finally this week, we're going to change tack slightly. We're going to have a look at cryptocurrencies. And is the crypto winter turning to spring? Well, it's not turning to spring here in the UK at the moment. We're going through another cold snap. But 2021 was the year of the Bitcoin roller coaster ride, whereas 2022, a lot of people are basically calling the Bitcoin hibernation. The days of the $60,000 Bitcoin seem to be a distant memory. Now, 2022 was dubbed, and you heard me use the term as well as many, many other people, the crypto winter, due to its low values and its lack of movement. Something we weren't massively used to, particularly in crypto markets, which, as traditionally have been extremely volatile. Now, Monday, in the Asian session, Bitcoin increased suddenly to $21,382. Now, if you consider Thursday last week, it was at $18,800. Now, that's obviously an increase of over $2,000 in just 3 days. And in fact, the 20,000 mark is approximately a market cap of $1 trillion. And we're the first time we're over 20,000 since the FTX collapse back last year. Now, currently trading around the 20,700, so it has eased slightly. But is that winter over? Is volatility back in these crypto markets, particularly in Bitcoin? Obviously, crypto-denominated stocks are on the up as well. But historically, cryptocurrencies have been extremely volatile. Remember your risk management techniques, and these markets are not for the faint-hearted. We wish you luck in the week ahead, and I'll see you soon. Bye for now.